The worst kept secret in Canada is out. The Bank of Canada has decided to hold interest rates steady. Um, so we'll dive into that as well as the latest stats and take your questions as always right here, right now on Live at Lunch. Thank you so much for joining me on this overcast Wednesday afternoon. Hope you're doing well. So the much anticipated announcement today was a bit of a nothing burger because a lot of people were not expecting Bank of Canada to do anything today as they held rates, the overnight or the policy rate steady at 5%, which means the prime rate will remain at 7.2% because it's always 2.2% higher. So now the focus has shifted from, what they're going, if they're going to cut rates, to when are they going to cut rates. And a lot of people are expecting that to happen as early as next month, April, which is when the next announcement is due. But I think that's wishful thinking. And here's why. I'll explain. Um, the Bank of Canada's press conference today didn't give us very much detail. It never does. It's just a lot of rhetoric over and over again. But Tiff Macklem, who is the governor of the Bank of Canada, reiterated one thing and said that their, I guess their decision making now is not whether or not these interest rates are restrictive enough, but how long they need to be at this level in order to make sure that inflation comes down. So he cautioned that inflation is still not where they want it to be, and they need to give interest rates time to do their job, which is all fine and dandy. So that tells me that A, there's no rush to cut rates, and B, they want to see consistent inflation under 3%, because their target range is between 1% and 3%, with maybe a 2% direct amount for the Consumer Price Index, or CPI. So it only dropped to under 3% a month ago, and the inflation numbers haven't come out yet for February. So they want to see consistent inflation numbers under 3%, in my opinion, before they do anything with the rates. And April is probably too soon. There's only one inflation announcement before the Bank of Canada's announcement. So I don't think they're going to do anything at that point because they'll only have 2 months worth of data. Most likely we're looking at June, or maybe even July, according to some economists. One economist actually predicted September. So it's likely going to be the second half of the year. Maybe in the fall is probably a safer bet. And here's the other reason why I don't think anything's going to happen in April, because the real estate market is heating up already. And I know interest rates are not simply based only on real estate, but there is activity in the market picking up. So there's no point from the Bank of Canada to throw fuel on that fire. Because all it's going to do is cause home prices to go up, cause inflation to stay higher. So that's going to kind of defeat the purpose of having these high interest rates. So I don't think spring is the right time for the Bank of Canada to do anything. And I could be wrong, right? And I'd love to hear your comments. So if you have any questions or comments, by all means, please post them here. And if I'm still live, by all means, I'll answer them. Or if you're watching this on the recording, again, by all means, I'll get to them as soon as possible. But and you can agree or disagree. That's fine with me. I love a healthy debate, and I'm just giving you my opinion on this stuff because I have seen the numbers in the real estate sector increase, which we'll get into later. We're seeing more sales activity. We're seeing prices, slightly inch back up again. So from that perspective, for the Bank of Canada to all of a sudden cut rates right in the middle of the spring market, I think they're afraid of, like I said, adding fuel to that fire. So I think they're going to keep their eye on that and probably not do anything until later, maybe June, maybe even July. So it'll be interesting to see what happens at that point. So, okay, so let's get into these real estate numbers, which I mentioned off the top, because we have seen a lot of activity pick up. And what's interesting is that home prices now are pretty much at the same level they were about a year ago. So if you recall, last year we got off to a slow start and then started peaking in March before the interest rate announcement. Again, they increased interest rates again, and that kind of tanked the market over the summertime. And then we saw a slight dip again, a slight increase again in the fall, and now we're kind of back down. But now it's been coming up. Since about December, January, home prices have come back up to more or less the same level they were about a year ago. So any gains that we had last year before the interest rate announcement are pretty much wiped out. And any losses that we had during the second half of the year have been made up, more or less, right? Because in Toronto, for example, relatively the same price. There's not much change at all from 2023 at this time. In Mississauga, it's down slightly, about 1%. In Brampton, it's only up about 0.5%. So again, pretty flat. And in Oakville, again, it's up less than 1%. So again, pretty flat. So that's pretty interesting. So I wanted to let you know that year over year. However, month over month, we are seeing a difference in prices, particularly in Toronto, where prices jumped 12% month over month. In Brampton, they also jumped about 5%, and in Oakville, about 8%. The only area of the four where prices actually fell was Mississauga, down about 5%. But looking at that, there is a greater percentage of sales of smaller, lower priced properties, such as condos and townhomes. Okay, so that when you take the average price of all sales, that's going to bring the price down. So the fact that Mississauga is down tells me that more condos and townhomes sold, and fair enough, I mean, sure enough, I checked the stats, and we're up about 8% month over month in percentage of sales of condos and townhomes versus low-rise homes and larger homes. So that can it's probably attributable to the lower price month over month. As far as everything else goes, we are seeing a tightening of the market. Inventory is up slightly, but nowhere near the increase in the amount of sales volume. Okay, so that effectively tightens the market. In Toronto, for example, supply is up about 11%, while sales are up 34%. In Mississauga, inventory is up 7%, but sales volume is up 26%. In Brampton, supply is up 6%, while sales volume is up 13%. And in Oakville, the inventory is up 20%, while sales volume is up 43%. So for people in Oakville, these numbers may seem quite large, but remember, we are dealing with a small sample size in Oakville, so everything is going to seem a little bit larger in terms of percentage. Okay, the other thing to note, and why I say that the market is heating up, is because we're seeing the months of inventory shrink. Okay, and months of inventory, just to be clear, is if no new listings came on the market as of today, how many months would it take for all supply to run out? Okay. The other way of looking at it is if there's 3 months of inventory, that means 1 out of every 3 listings will sell. Okay, in any given month, right? Okay. So having said that, in Toronto, the months of inventory is down from 3 months to 2.5 months. Okay, so it dropped about half a month there. In Mississauga, it fell from 2.3 months to 2 months. In Brampton, it fell barely from 1.7 months to 1.6 months, but that's already a hot market in Brampton. We're already under 2 months there. And in Oakville, it fell from about 2.4 months to 2 months. Okay, so um, higher sales volume, fewer listings, fewer active listings, fewer newer listings means that the market is getting tighter. Things are heating up, prices are going up. And this is even before the interest rates have been cut. Okay, if rates get cut later on in the spring or summer, then this is only going to increase, as far as I'm concerned. Um, and the other thing I want to point out is the days on market has also been reduced greatly, back to about normal levels. So in January, and here's an example, in January in Toronto, we were seeing about houses take an average of 55 days to sell. Now they're selling in 39 days. In Mississauga, it went from 57 days to 42 days. In Brampton, from 52 days to 33 days. And in Oakville, from 63 days, pretty much cut in half to 36 days. Okay, and this is total days on market, so property days on market, compared to the traditional listing days on market, which you may see in listings or other people talk about. So there's something to differentiate there for sure, because you may or may not know when a property gets listed on the MLS, for example, it counts the days that it's on the market. So if after, say, 3 weeks, it doesn't sell, that's 21 days on market. It gets pulled, so it gets canceled, and then relisted, usually at a lower price or whatever. But then the days on market goes back to zero, right? So now it looks like it's a fresh listing and it starts all over again. And if it's on the market for another 3 weeks and doesn't sell, it'll only show 21 days on market, when in reality, it's 42 days on the market, because we have to count the previous days that it didn't sell as well. So I always look at the combined days on market from the previous listings, the expired listings or the canceled listings, as well as the current listings. So just so not to mislead anybody, because if once you relist a property over and over and over again, every month or so, it starts back to zero. That new 30 days on the market is not factual, right? So just a heads up there for anyone watching. All right, so I don't see any questions here, but I just want to leave you with one thing before I go. And I've said this before. The most important thing that I want to leave you with is, about buying or selling a home. It doesn't have to be overwhelming or stressful. There's a certain amount of stress, yes, but excessive stress, it shouldn't be that way. So the most important thing to remember is to work with a real estate agent who is not only experienced and knows what they're doing, and I talked about this in previous weeks as well, and I gave you some examples. Those two things are a given, but that agent has to truly care. Okay, the agent you work with must truly care about you and your family, and not just be looking for another commission check. Okay, the agent you work with has to understand your situation and take the pressure off of you, so that moving into a new home, it's obviously an emotional experience, but you don't need any unnecessary pressure. So the agent you work with has to take that pressure off of you. So keep that in mind next time you're thinking about buying or selling a home, and the people that you're working with and interviewing and hiring. Okay, so share your thoughts or comments below. And I see we have a question here. Valerie Kabouris Zepieri, thank you so much. Should buyers be scared to look at homes that have multiple past listings? Great question. Okay, so if a house doesn't sell, bottom line, there's usually one reason for that, and that's usually price. Okay, say what you want about the condition of the house, say what you want about the location, of the staging, of the photography, of the marketing, of all these things contribute to a quicker sale. But if a house is listed over and over and over again, it's usually because the seller is out of touch with reality. and I mean that, in the nicest way. Um, and they're not listening to their agent, or maybe the agent's out of touch as well, and just trying to hold on to that listing, and they keep reducing the price, reducing the price, reducing the price. It's rare that you see multiple relistings at the same price or higher. It's usually because it didn't sell at this price. Now they're trying to sell at this price. Still doesn't sell. Now they sell at this price. When originally they listed way too high to begin with, if the house is only worth here. So should you be scared? I don't think you need to be scared. Due diligence is something that you need to do and have your agent do. And speaks to what I was saying before about having an agent working with you that's on your team and working together, that's looking out for you, right? And not just be looking to make a sale and push you into a sale that is not right for you, or maybe you overpay for something, right? So the agent you work with has to look at the market overall, look at the comparable properties and say, you know what? Yeah, I know you like 123 Main Street, and I know it's been on the market for, say 9 months and been relisted 5 or 6 times. But the actual price of this place is, 900,000 when it was listed before at say 1.2 million or something crazy like that. And then they had to go through a series of price reductions. So it's all about case by case. Have your agent do their due diligence and determine what the actual property value of the house is, and whether or not this, because it could be a good deal for buyers. They shouldn't be scared off all the time, because there might be a good deal sitting there. And the longer that it's on the market, the more desperate a seller would become, and the more negotiable the price would be at that point, right? So unless there's something seriously wrong with the property, let's say it was the site of a heinous crime, or it's next to, a rooming house, or, it was a grow op or something like that. So all these things that need to be considered as well and investigated by your agent. So that's why it's so important to have an agent representing the buyer. And I don't understand what's going on in the U.S., where they're trying to eliminate the buyer's agents, which is the dumbest thing that could ever happen. Because if buyers don't have their own agent, they're going to be tricked and sucked into stupid deals and overpay for things, because if there's only one side is represented, the selling side, then we're in a heap of trouble, and buyers are in a heap of trouble. Okay, so I hope that answers your question, Valerie. I know it was a bit of a rant and I went off on a few tangents there, but it was a great question. Thank you so much for that. Okay, so I don't see any other questions here, and you're very welcome. Have a great day, everybody. I'll see you next week.